I know for a fact you've tried this before in trading, and I know you have, right? You end up taking a buy right there because, it's an easy setup. It's a break, retracement to the significant level, rejection, body closure right here, and you're anticipating this move to continue up right here, right? Such an easy setup. Every fake demo guru online is selling you a course on how to trade this way, and, everyone is trading this way, so it gotta work, right? But the problem is it doesn't work. And I swear to God, I know you've tried this before. As soon as you enter your position, price does this. Boom. Immediately goes against you. Immediately stops you out. If you're at your stop loss here, hit. Here, hit. Here, hit, right? As soon as you enter your position, price goes immediately against you. I know how frustrating this is because I dealt with it for years as well. That's why I created this strategy to avoid it, right? Now, what does price end up doing, right? 5 minutes later, you come and look at the charts again, right? Because you're so frustrated. So you take a break. 5 minutes later, boom, this happens. Price immediately goes to your original take profit, and the move that you were anticipating actually played out, but you just got stopped out right before it played out. This is the most frustrating thing ever in trading. Trust me, I've tried this so many times, and I know you have as well, right? Now, you get stopped out right here, right? Because you don't understand the three phases in trading, the three-step strategy, right? In trading, there's only three phases, and the market can only be in one of these three phases at a time. There's the continuation phase, consolidation phase, liquidity phase, and then it starts repeating itself. CCL, continuation, consolidation, liquidity, continuation, consolidation, liquidity, over and over again. And when something is repeatable in trading, you can make so much money off it. It's unbelievable, right? So your entry wouldn't be right here because you also have to put two and two together. If everyone is trading a break and retracement or break and retest and then a continuation, right? If everyone is trading this way and 99% of traders are trading this way, but 99% of traders are also unprofitable, put two and two together, right? It doesn't work, right? Now, your job watching this video right here, your job as a trader is to be inside the top 1% of traders compared to top 99% of traders, because 99% of traders are unprofitable, top 1% of traders is profitable. But what does the top 1% do differently compared to the top 99% of traders? Well, it's very simple. The top 1% of traders waits for the 99% of traders to get stopped out. So your entry wouldn't be right here. Actually, right here, your entry would be right here when everyone has gotten stopped out, right? And this is what the strategy is all about. It's unbelievable. It works like a charm, right? I'll be going over the three-step strategy, the super simple, stupidly simple three-step strategy that's made me over 100,000. I think it's made me over $180,000 at this point with proof of everything, obviously. But I mean, hope you guys take advantage of this video. I'm gonna share some valuable information. I'm not selling a course on anything. Don't worry. I'm just gonna, give you some gems, and hope you take advantage of it. Take some notes and watch this entire video until the end. And if you do, you can potentially take advantage of it and become profitable. I'm not even joking, right? Now, I hope you guys enjoy this video, and let's get into it. Now, you gotta understand that there's only three phases in trading, and the market can only be in one of these three phases at a time. It can't be in two phases at a time, three phases, zero. No, it can only be in one at a time, and it's a repeatable cycle, right? The market can either be in the continuation phase, consolidation phase, or liquidity phase. And what comes after liquidity phase? Continuation again, right? Then consolidation, liquidity, CCL, CCL, CCL forever. And when something is repeatable, as I said, you can make a lot of money by taking advantage of it, right? So to go over it right here, step number one is to identify the overall direction, aka bias, and this is the higher time frame trend. This is the continuation phase, the first C, right? Now, obviously, you can see that on the left we have a bullish example, pretty self-explanatory: high, higher low, higher high, right? On the right side we have a bearish example: low, lower high, lower low, pretty self-explanatory, right? It's just the higher time frame trend, right? That leads us to the step number two, right? Wait for buy side and sell side liquidity to form, right? This is the consolidation phase, right? Whenever price is consolidating, it's just moving sideways like this with no clear direction. And you can clearly see that right here, we're just moving sideways, right? If you go to the lower time frames, let's say that this is a 30-minute time frame right here. This is obviously 6 5-minute candles, right? Pretty self-explanatory, right? On the right side, we got a consolidation area as well. But the key thing here is that whenever price is moving sideways and consolidating, it's also generating buy-side liquidity above previous highs and sell-side liquidity below previous lows down here. So there's buy-side liquidity above these resting highs and sell-side liquidity down here, right? Vice versa, buy-side, sell-side liquidity. And liquidity equals stop losses, right? Liquidity, right? Liquidity equals stop losses, and stop losses equals money, right? And the price obviously wants to hunt this money before shooting up, right? So in order for price to push down, we need to push up, grab liquidity, grab orders, right? I've got a good ass example right here to put it into perspective, right? In order for price to push down in a bearish example, right? We need to push up first, grab liquidity, grab orders, stop out 99% of traders, and then boom, with that volume and momentum, we can continue down. Vice versa. In a bullish example right here, in order for price to shoot up, we need to push down, grab liquidity, grab orders, and then boom, it's going to shoot directly up after that. So 99% of traders would be getting into a buy position right here after this candle closure because it's a break, retracement, so break and retest, and then anticipating this move, right? The problem is 99% of traders are trading this way and 99% of traders are unprofitable, as I said, right? So your job is to wait for everyone to get stopped out, liquidated, manipulated, stop hunted, and then you can take advantage of that move post liquidity grab, right? So everyone is getting in right here, stop loss right here, and as I said, stop losses equals liquidity. Liquidity equals money. And it's all the same thing right here. So there's resting stop losses below previous lows, aka sell side liquidity. And that means in order for price to shoot up, we must grab orders to the downside. We must push down, grab orders, stop out everyone, manipulate everyone, and then boom, push up. So price doesn't push up right here because when you make money as a retail trader, the market loses money, okay? Whenever the market makes money, you lose money. So obviously, if everyone is getting in the buy position right here, take profit up here, is it just going to shoot directly up? No. Everyone makes money that way. The market loses money. The market is obviously not going to lose money, right? It wants to make money. So it's going to push down, grab orders, stop out everyone, right? And then it's going to push, right? So it makes the most amount of money. It's the most efficient way to make money. It's to stop out everyone. And then when everyone has gotten stopped out, move, right? That's how this strategy works. Vice versa. We see the continuation right here, low, lower high, lower low. Then we start to consolidate right here, right? Everyone gets into a sell position right here on this bearish closure, meaning that they have their stop loss up here, right? Stop losses equals liquidity. Liquidity equals, liquidity equals money. Stop losses equals money. Money equals stop losses and liquidity. Same thing, right? So there's resting stop losses up here, which means that in order for price to push down, we must push up first, grab liquidity, grab orders, stop out 99% of traders, and then boom, continue down with that momentum and volume from the liquidity grab and ideally also a market open, which I'll go over some session timing as well later on, right? Now, your entry wouldn't be right here. Your entry would be right here when everyone has gotten stopped out, right? Stop loss here and then take profit down here, right? Same with the bullish example. Your entry wouldn't be right here. It would be after everyone has gotten stopped out. So right here or on the break of the previous high, stop loss here, take profit up here. Such an efficient strategy, 80+%, actually 81 to 82% win rate. Average RR is 1 to 1. I mean, there's a lot of statistics. It's super profitable. It's made me over $180,000 at this point, right? It's so efficient, right? Now, that leads us to the third phase, right? Wait for the liquidity. So as I said, your job as a trader is to trade like the top 1% of traders, not the top 99% of traders, because 99% of traders are unprofitable. So your entry, as I said, wouldn't be here. It would be right here, post liquidity, right? So post liquidity grab. So the liquidity phase is the third phase, right? So if we put it all together and if we go back here, right? Your job is to wait for everyone to get stopped out and then move. So identify that we have the continuation phase, then the consolidation phase, and then you realize that we aren't just going to push up here. We just aren't, right? We're going to push down, grab orders, grab liquidity below previous lows in an overall bullish trend, right? Because it's got it will most likely follow the higher time frame trend, which is bullish, right? Same with the bearish trend, right? And then after that, liquidity phase, liquidity grab, boom, enter, stop loss, take profit, right? So simple. Actually, it's simple, but it ain't easy. And I'll show some live trading examples as well and some chart examples in real time of this happening, how you can take advantage of it, how I make thousands of dollars using this and how I've made, a lot of money doing so and how you can as well. So let's jump into that. Let's go over to TradingView and let me explain how it works on real chart example. So we're on TradingView right now. I'm just going to pick random examples. This is live. Actually, it's not live because it's Sunday right now. Markets is closed, but I'll just pick random examples right here. I can already see one, right? Continuation right here, right? The big overall higher time frame trend. Then we start to consolidate, move sideways, right? Then we get that liquidity phase, so CCL, right? Liquidity phase breaking these lows, and these lows. And then what comes after the liquidity phase? The continuation phase again, CCL, 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 forever basically. Also right here, happened again, right? Continuation. We can actually say that this is the continuation. You can argue for both things, continuation, consolidation right here. Then we get that liquidity phase right there. And then after the liquidity phase, we get the big continuation, right? It's so simple. This isn't the cleanest setups, but you can get the idea, right? Push down, liquidity phase, boom, shoot up, right? Now, to go over it again, to go over some more, I mean, we can go over this all day. You can also see it right here. Happened right on this candle as well. You can see if we go down to the, I think we can go down to the 15-minute time frame and look, there's probably some consolidation in lower time frames. Yeah, right there. Then what, we push down, then we push up again. So boom. I mean, it's so easy, so simple, right? It also happened right here. Beautiful, actually. You're gonna go over right here as well. Continuation, right? Consolidation. Then we get that liquidity phase right there, breaking previous lows right here. And then we get the continuation. Happens on all time frames, all sessions, and on all pairs. Its time is fractal. So this means if it's going to happen on 15-minute time frame, it's also going to happen on the 1-minute time frame and on the 4-hour time frame, etc. You can also do it again, right? Continuation, right? Because obviously continuation, consolidation, liquidity, continuation, consolidation. And then we get what? The liquidity phase, right? And then we can get the continuation phase again, right? It's so simple, it's so clear, it's so easy to read, and it's just, it works so beautiful, right? It really does, right? This play price right here plays out, right? Obviously your stop loss is logical, so that means it is below the liquidity grab and you're targeting probably these levels up here or some kind of levels up here, right? Now, to go over it again, we can go over even more, right? I can also go on different pairs. It's the same exact thing, right? You can also see it right here, right? This is the liquidity phase. I'm assuming you're getting the hang of it, right? It's a consolidation area, then liquidity, and then post liquidity grab, we get the continuation, right? Now, let me find some bearish example. There should be plenty here. You can see it right here, broke previous highs, liquidity, boom, right? I mean, it's pretty self-explanatory. It's continuation, consolidation. I hope I'm not boring you, but I mean, it's just so beautiful. Price action is just beautiful when something is repeatable and when something clicks, right? And obviously, I'm not here to gatekeep any information on this channel or whatsoever, right? I'm not a fake demo guru that sells courses for a living. I trade for a living. You can also see it right here. Continuation, consolidation, liquidity, breaking these lows. Everyone had their stop loss down here, right? Or here. And after the liquidity phase right there, we get the continuation, right? It's so simple. So clear, it's so beautiful, right? We can also go on different pairs. Let's actually just go from the day of this recording. It's currently Sunday, so the market isn't open, but you can see it as well. It happened right here. Actually happened also here, continuation, right? We get that consolidation right here. Then we get the liquidity grab right there, breaking previous lows. And there's obviously liquidity below previous lows and above previous highs, and liquidity equals stop losses equals money, right? Grabs liquidity right there, breaking previous lows, stops out everyone, and then boom, continuation post liquidity. Then we start doing it again, consolidation, liquidity, right? And then continuation again, right? It's so beautiful, like it really is. You can also see it to the bearish side right there, breaking these highs. That means that there's resting stop losses up here, resting money. We grab that liquidity, right? Boom, continue down. I mean, isn't this just beautiful, everyone? Isn't this just beautiful? I want to show you guys some trade recaps as well and some live trading examples of me using this, of me making multiple thousands of dollars. You can also check on my YouTube. I've made so many trade recaps at this point. Also losses, obviously, because I'm not gatekeeping anything. I'm not selling you a course, blah, blah, blah. You can see 2.6K, 3K, 5K. This was actually a pretty good day, etc. Right? Now, let's go over trade. Let's go over a live trading example to show you guys how it's done in real time. US30 is looking pretty clean, but if I were to get entries, I'll probably get entries here, but that's like our advantage point is like 30. I mean, yeah, we can take this. Advantage is like 30 points, so yeah, we can take this. Let's just wait for a little pullback and then, okay, wow, damn. If it re-breaks though, should be able to push up then. If it re-breaks though, that would be pretty nice. We could have this as a advantage point. Then you just have take profits up at like these gaps up here. So just because it is re-breaking, I'm gonna place buy stops here and break previous 30, break current 1 hour. Okay, everyone. Gonna place buy stops there. Yeah, so now you should be activated if you aren't already. Just be careful here, okay? Once we liquidate these highs, I mean, we have clean traffic up here, so I am gonna have a bit runners. But we will go pretty aggressive break even here at this red line, okay? That's like 20, that's like 30-point profit. So it's going to be an aggressive take, no, not take profit, but an aggressive break even, because I don't want this to happen. I don't want, you know, price flipping bearish here after grabbing this liquidity up here. That's why. I don't want this to happen. And then we end up taking a loss, you know? Rather just go break even safe up here, you know? All right, I'll go break even right now as we speak. Break even right now. Break even trade. Okay. Break even trade. Let's hope this runs a bit here. Let's hope this runs a bit. Okay, nice. Can we break and push a bit further? And I mean also aggressive break even, because look at this. We didn't, you know, we have no bottom wick. Price could just reverse on us, and that's the move for the entire day, you know? So can't really do anything about it if we do get tap break even. Just how it is, you know? But this is nice. We are almost breaking these highs. Nice. We are breaking these highs now. Do think we can continue though. We are breaking the highs now, so that's at least something, and we're pushing a bit here. Okay, can we push a bit further? Oh, we're getting close. We are getting close. I'm gonna count for spreads here, so yeah, like that. Let's just see it break one more time, and then that should be take profit. Damn, I'm out. Damn, let's go, boys. Did you guys see that pop? Damn. Now we rejected. Damn. I'm out, everyone. I'm out. I just looked at my second monitor and boom. And then, you know, trading view was like half a second late. Nice trade, boys. Nice ass trade. So it's your lucky day right here, because I've actually made a 16-page free PDF file going over this entire strategy right here. As you can see, right? Continuation, consolidation, liquidity, continuation, right? You can just copy this. This is what made me profitable. This is what, you know, this is my whole 5 years of experience just on paper, right? You can download this completely for free inside my Discord. And if you like this video, found it helpful, please leave a like, comment, and subscribe. Rewatch it if you need to. And otherwise, thank you for watching, everyone. Take care, and I'll see you guys in the next video.